Good morning and welcome to the ThetaWaveTrader. We're doing a little catching a little long here this morning. I think we caught it a little too early. I wanted to see more of a significant move above this order block here, this little breaker, and we did get a shift above, but I wasn't. Anyway, I don't like the fact that we've been digging back down into this multiple times, so got my stop loss relatively close here. We do have a fair value gap below us here. I won't want to see them revisit that. We got equal highs here. We have relative equal highs above us on the 1 minute and relative equal highs above us on the 15-minute time frame as well. So that's the upside objective. We'll see how that pans out. Yes, I'm getting started early today. I've been up for an hour already, so I think it's thought I might as well just pop on here and start an early run. I got a new headset, so hopefully you won't have to hear the fan buzzing in the background. And let's see where we're at. Oh, I don't see anything on there yet that says we're live. Sorry, I'm just double checking on to see if we're even live on online here. Skip this. Where are we at? All right. It looks like we're live. Good morning, Hadi. Good morning, Hans. Yeah, I want to see a bold move above here first. We do have a break in structure with a body breaking above here. And we're retracing all the way back inside it. So I won't want to see it get any lower than this. There's a tiny little imbalance down here, right down in here, which we seem to have hit. So I'd like to see it slowly climb out of here now. We have worked this whole bottom piece here, and we've come back inside it. We did trade below that level, but not below here. We've come back inside this, filled it. We've come back inside this and filled it. And now we filled that little imbalance here. What concerns me is that we've got this little fair value gap here. We've traded below it, and now we're hitting below this order block here. So I see one for a long, one for a short, and this whole messy stuff here. And I had my finger hovering on this button, and I must have tapped it and got in a little too early. It's like, damn it. Oh, well, we'll see if it works out. So we're just going to see if we can weather this high resistance crap. Now it's hanging in here way too long. Now that it's been muffing around here, I'd want to see it break these two candles on the upside. What time is it there? It's like 8:52 New York. That's what I'm waiting for. It's the kind of response you're looking for. Big displacement. Get above these levels. Use them for support right here, and then start going higher. Paulette, good morning. How are you? Now you want to see a portion of this stay open now. I'm doing very well, thanks for Paulette. It's 6:55 in the morning here. I've been up since about an hour now. Heading out to see mom and dad today, so we'll see how that goes. It's exciting. I love seeing my parents. They're awesome people. So my brother, his wife, and Carl and I are gonna head out there and see them. You can be in the charts all you want, but it all boils down to, in the end, the people you love, friends, family, hanging out. You make a bit of cash here on the side in demo dollars, of course, and then go out and buy yourself a demo coffee and enjoy a demo lifestyle. No, this is fun. I enjoy being here with you guys in the mornings. So this kind of thing I'd like to see this kind of stay open so we don't get a full fill of this, and the fact that the bodies are staying at 50% or greater than that in that consolidation, or sorry, that fair value gap. I say words and have to change my. I just would blurt out whatever's in my mouth. It's not a consolidation. There's the. This is up. You want to stay in the upper portion of this. Watch the bodies here. You want to see them stay above 50%. No, you don't want to see that. There's a little imbalance down here. Should be just below that. Good morning, Craig, Jake. If I may ask, why trade before market open? If I see a trade pre-market, then and it looks good enough, I'll take it. This was not a great trade, just because of the. I wanted to see this earlier. As soon as we got here, I'd like to have seen that displaced up, come back down, find some support of that, and start driving back higher into the range. But didn't give it to us, or didn't give it to me. Morning, Ollie. Yeah, this is definitely not a take a trade in this kind of environment. I was hoping that would have been a lot cleaner. But this is what you get when you're in high resistance and it's banging around. We've got a break-in structure here. Got bodies that are just hanging out on that candle. I'll have to move this up here now. I don't want to see that come back down into here. See how we've got this high taken here? We have a reversal, taking out that candle on the downside on a close. You want a body get below there, and it's just hanging on there right now. So if it starts to come back through there, then we're coming back into this range again, which is not where I want to be. So you gotta know when you're on the wrong side of it too. So now I'm just trying to recoup whatever loss. If it comes back into here, I'll move to the sidelines and wait. So there you go. We're going to go lower just from this area here. So when you're on the wrong side of it, you got to trail it in quick because you see, oh, I'm on the wrong side of that. So we're going to go deeper into this range here. So you wait. So Jake's saying, I knew it. That's why you don't trade before opening, man. Hadi says there's a 15-second reversal going on there. Of course there is. On the 1 minute, you can see it on the 1 minute as well. Now if we can get through this level here, we're back in sync again. This is just going up into this order block here. Come back and fill that fair value gap there. More bearishness is if it doesn't fill. And it did. So we've got wait and see until we get something more clean. Did you guys have a good day yesterday? It's pretty choppy there. I came back in later on in the afternoon. I was like, oh yeah, it's still pretty choppy. Red folder news at 10. Let's go through some of these up here. ES. Daily. We have a small reverse. Going either direction on that, on the hourly. Nothing on a 1 minute. Slightly bearish on a 15-minute chart. Heading for that fair value gap, or that gap, common gap down here first. We have higher high, lower high, and lower high. So NASDAQ has made higher highs, and ES has made lower highs on Dow and ES. So get below this candle here. This is the daily. Below this, Yeah, I'd expect to see a down day here. Continue coming lower. You're right in the middle of this busy here on Dow. We haven't got nothing. We have nothing in ES on the daily that tells us where it's headed. And we have nothing on Dow or NQ either. We have a little imbalance. We've taken out the highs. We got a BISI right here. $4.29. Dixie still sitting inside that daily fair value gap there. They've had a nice little lift off of here. Didn't even give you an opportunity to get in on that. Should put downward pressure on all these other stocks, all these other Forex pairs. If that continues to go higher, highs taken. These little seek and destroy moments. So you're probably looking for 129.63 to 129.67 and in British pound. Or 129.71 to 129.75. Oh, right where it's at right now, 107.74. Let's see if it freezes on that. It starts to go back up. Be looking for a reversal here anytime. But if the American dollar keeps climbing, it's going to put pressure on this to go down. We have to break structure here to the upside to go higher. Otherwise, we could just get a return to 107.78 and then go lower. Oil. $67.45. The downside. Upside is 68.08. Come back inside here. If we leave a small portion of this open and continue going lower after we've hit this order block here, I'd like to see that continue going lower. We'd have to break this to the upside to warrant a move inside here further. And you got to look at that whole inside piece. You're above 50% there. So you want to see a sizable retracement into here to go higher without taking that order block out. So you're only allowed to down to 68.04, 68.03, somewhere around there. Wheat, we finally blew out that low yesterday, which is good. And I want to see it come back, find some support of this, and keep coming lower in wheat. Oh, looks like we hit the high. Looking for these lows to get taken out now. In soybeans, corn. Oh, we got to get below 4.072 on a close. Coffee, we've got a nice reaction off at 248. So I'd like to see that start climbing higher. If we can get above 252, then we're looking for these highs again, getting back into that range. Sugar. In the last hour, I'd like to see sugar go long. See sugar go long to 22. So I got them to 22, 22.42. So I'd like to see sugar head to today. Perfect. From here, up she goes. Let the cattle free, man. Let them head out to do some roaming above the charts. So I expect to see them go long now. Cocoa. Not sure about cocoa right now. If you're going to turn around, let it be now. If this ends up turning into a wick today, if it doesn't, if it closes above this today, tomorrow we're looking for a retracement and then go higher inside that range, 50%. We're looking for 50% of the range here of this gap in price, and we're just shy of it now. What's the upside price for today? 82.5 and 50 is 92.5. So we have 10 more handles to go to get up into that 50% of the little piggies. got much on Bitcoin. The 1 minute gave you the reversal at 8 o'clock. I don't see anything in there just yet. 71,000 for Bitcoin, eh? It's crazy. Well, if you can get above 150 and use that all the way down to 71,114 to go higher, I wouldn't want to see 71,1 get taken on the downside on a close. Gold going sideways. The 15-minute chart. No real breakout here yet. So sit and wait on gold. All these banks filling their coffers. AMD, UNG. Look at that drop yesterday. Just gap right back down to just above our little gap that we had here. Our imbalance. This was sitting in the imbalance on my other chart at home. Sitting in this. Right there. So we're just above it. We gap down, so all bets are off now. We could be heading for here. The fact that we did not break that high and did not close above these gaps inside 50% of that range, we're not even at 50. So the fact that it gapped down on us, it's a sit and wait now. Once we take these lows out, if we get a reversal there, participate in the reversal. There's a much higher likelihood if we see a reversal down after taking out significant lows to catch a ride. Oh, it did eventually run back up then. Small reversal there. ID probably caught that on a reversal, did you not? Oh, you caught another one, good. Catch this reversal here on a 15-second chart. Oh yeah. Nice one, Hadi, if you caught that. I wouldn't have caught it either. Didn't show you anything there. Breaking structure here. You didn't even trade back into that, so we're already too deep into the range before that. Hands you the low. But we're back inside this level again. Banging around on that. It's one of those wait. Good for you, buddy. It's one of those wait and see now. Wait for the news event to unfold. Wait 15 minutes, and then once things have settled down, wait for an opening. Good morning, Russell. Anybody got a stock they want me to look at while we're waiting for the news event? I'd like to see that just freeze right in this level now, and then just start to climb back up and start heading back up to this Friday's first presentation. It's best to wait after a red folder event to wait at least 15 minutes, see what kind of, when you get a big news events happen, you want to kind of just settle in on about 15 minutes afterwards, because that's when all the activity is going. Michael tends to wait 15 minutes. Or suggests waiting 15 minutes if you're relatively new to this reading chart stuff. Because there's a lot of volatility after a news event or during a news event, right? So up to 15 minutes afterwards, give it a chance to settle down and then start looking for your trade setup. Problem is when you see all that volatility, it's like a bunch of predator cats out there. They see something move quickly and they want to jump on it instead of just waiting. Just waiting. Craig needs an oil change today. So what do they say, 640 something? $67.48, I think it was. So we could be running back into this fair value gap here inside this 15-minute box. I could revise that down to 67.37, 67.30. You'll fault me to fob me out. 78% fob oil retracement. March new week opening gap void as well. There's a new week opening gap sitting right down here. Keep looking at that hidden lower. That's got nothing. What do we want to get it to? 71 something? Just shy of 72, 71. That puts us right back into here. Good. Off this order block now. I'd like to see it get some support off there now. Go higher. Gold still sitting flat. Good morning, Zach. There's the new week opening gap. Puts us into that 67.58. 67.48, I think it was. Yeah. Then we have that little fair value gap below us here. Yeah, the new week opening gap, well, new day opening gap. Where's that sitting? Oh, look at that nice little run. That's good. You wanted to see that. You want to see that way back here, though. So it's just running that liquidity on the hourly there, or the 15-minute chart. Yeah, I'm not touching that either. I just ran out liquidity here above. Cleaned out all this liquidity above us. Now zipping back down into the range. That's just seek and destroy right now. It's just taking out both sides of the market. I got these equal lows below you. back into this. So we want to see that give way and then start running lower. Put my vest on. It's cold down here. How's your oil doing, Greg? I'm liking that. If we can get a reaction off that. If not, we still have that little fair value gap down here on the hourly. There's a small little imbalance down here too. 67.37. So yeah, it puts us right in this fair value gap below us here. It's a little downward box. If you're going to put a little magic box down here, you look about there. Good morning, Tristan. Edgar, good morning. Oil might be the trade today. There's a 67.48. I think we're at 67.49. So 1 penny short of where we were looking earlier. So do we get a reaction off of this and leave this open, or are we going to drive down one more time into here? Because we're probably well into the optimum trade entry reversal level now. I want to see a wick get down here and the 15-minute to close up above that 48. Good morning, Edgar. Abs, running late. Good morning, everyone. Good morning, good morning. You're not missing anything, Abs. Yeah, I got a feeling they're not going to leave these equal lows untouched. Yes, the WTI crude oil. I like to see this drive down here, come back up and use this initial first value gap as support to go higher and drive up all through here. This would be a really good break-in structure to confirm that and continue on higher. But that's way up in this range again. So first initial one, break this high if we're going to go higher. Bold candle, come back, find support at that, start coming back into the range. You're looking for 68 big figure then, like a 40-cent run, 30-cent run. If not, if this holds, then we can continue coming lower, downside objective there. Look at this dog's breakfast. Just like we were saying, running liquidity on both sides of the market now. On that hourly higher, took out all these hours here. 15-minute took out all the 15-minute highs. Let me get rid of this here. Took out all the highs, taking out the lows. So now what? Do we have a NQ as an open yet? Oh, yeah, it's up there. Should have wore socks down here. It's cold in this basement. It's like watching paint dry, isn't it, Craig? Trade through this now. We still have the 10 o'clock news release. Sorry, I keep banging my mic here. Not used to having a mic over my head. My laptop's really squealing with the fan, so that's the only way I could keep it away from you guys so you don't have to worry about listening to it. So there we go, we're entering into the box now. And below us we have the volume imbalance from Monday and a fair value gap first presentation from Monday. It's continuation higher off this candle. Little box would be up in here. Right in the middle of that consolidation. You want to see that pop through here now. Otherwise, that's just a CAM model 2. It's a late CAM model 2. You usually want to see a CAM model 1 right here. This is your CAM model 1 entry for a short. Once you get below it, the 2 would be right here in the middle of that, which is right where we're hitting right now. Find some sensitivity. Now they're going to drive through it like this. See that candle's just driving through. Then a CAM model 3 would be from low to high, take 50% of that. You don't want to see it break 50%. So you're going higher now. On a close, that is. So you're looking to go higher. Well, we got 15 more minutes. Got nothing here yet, Craig. Morning, Derek. How you doing, buddy? Stabbed right there into the box. I want to see that react out of here. That's the ideal place. I want to see it hit and then start coming back up. Yeah, it's a matter of waiting there, Derek. I've seen lots of setups this morning, but they're small little ones. And I accidentally hit my buy button earlier. I thought I'll try and work it out, and it just went in the wrong direction. I must have my finger just hanging on the button, and I just tapped it to move it. It entered, and I was like, oh, I didn't want that. Could have closed it out right there, but didn't. I thought, oh well, maybe it's fate saying you should buy this. I got a bunch of stupid stuff go through my head, like, oh, maybe I'll just see if it works out. And it totally didn't. 67.30, and the final nail is 67.28. So I'd like to see some reaction off of here. Now these little imbalances, see how it's come down to that imbalance on, or that volume imbalance on Monday? How we found some sensitivity in that and inside the first presentation fair value gap. Takes out a low. Look at that, just keeps running back and forth, not giving you a clean entry here. This is where your wisdom comes in, Derek, where you just go, I'm waiting for something clean to set up, and we're right before big news release. I had the same thing done myself and think exactly what you thought maybe it was supposed to get, get in there. I'll wait to see what happens. Crazy. We think at the same time. Yes. And sometimes you get your superstitious side kicks in. You go, oh, maybe that was fate that accidentally hit my finger for the trigger. I think, oh, why would I want to tempt fate? Why not let it go? Yeah, right now for NQ, see how we're right in the middle of this? We're sitting right around equilibrium right now. We've come back to a consolidations high. So there's a CAM model, one entry for a long inside this range. So that would have been a nice little run up. You're below 50% of the range, so you could have used a fib tool on the way up. You got a reversal here, but it's not a swing reversal unless you count this guy here. Uh, we have a body trade below it. So when you see these two candles get taken to the downside, so right here we close below them, come back up inside them, go lower inside this range, and literally that 50% of that huge range there, if you would have used the fib tool technique to manage that, you would have been 50% there, would have taken half your trade off, 62% right there on the money, and then you would have closed it at 50, would have came back and taken you out. So you would have made a small bit inside that range there. You would have made a small bit on this inside range here. So internal range liquidity would have been fine there. You've got a reversal above here. It's come back inside all the way down to the bottom portion. So I'd like to see that go higher. We need to get through this candle, and you're running back up into the premium portion of this range now. So if you get in above here, you're already above premium of that small range. So is it worth getting in on something like that? See what I'm saying? If it closes above and gives you confirmation you're going higher, then right there you're already above 50%. So you're paying for a premium to get hopefully a higher premium. And this one hasn't broken that structure to say you're going to go higher. So if you lose this right here on the downside, like you're digging right now, then we're going lower, digging deeper into this range. So you got to weigh all those things really quickly in a 1 minute chart. See how we've closed below here and we've closed below here. And if we close above there now, you can see how it's just going back and forth. One's going low, one's going high. And if you keep getting beat up in that kind of a thing, you say, well, if I just get beat up once, I'm on the wrong side of this and I wanted to go short now, and it starts to trade above it again, then you wait. You just keep getting beat up in here. It trades above, giving you an indication it's going higher. Trade below, giving you an indication it's going lower. So you wait for you're going to get that one time, you get beat up once, then wait, get back in sync when it finally breaks this candle's high on a close, or breaks this candle's low on a close. Otherwise, let it bounce around, do its own thing there. If I had to pick, I'd say we were going to go down further to 50% of the line, currently around 5393. Yeah, we've already spiked down and cleaned out all these lows. So, because we've hit that weekly fair value gap, our new week opening gap down here, we've reacted quite nicely off of that. So, I'm not sure, Derek. I can't even say 51% in either direction right now because it's sitting in the middle of this range here. So I want to see it. I'm still trying to debate where it would go inside this range. So if we get above here, which we haven't got a close above it yet, even that, then it would be 50% slightly bullish inside this range. See, now you're above it, closed above, so now you're slightly bullish inside it. Now I want to see come back, give it a little kiss here, right there. Now you want to see it go a little higher. And you're right inside the magic box already, so I don't even know if you start clearing this out on the upside, then I start to go a little bit more bullish. But right now we've just traded back up into a premium. So right there, that little kiss off of there, that's the premium box that you're sitting in. So, you know, that's why I say inside that range, you don't want to pay a premium just to get a slightly smaller, a higher premium. I think Michael was supposed to be on this morning too at 9:45, but haven't seen him yet. They must be messing with him. Powers that be. Well, he said, what was this week was his last post. Didn't he mention something about it being his last video? He might wait till the new year, or he usually quits around Thanksgiving, American Thanksgiving, doesn't he? So you're looking for the new day opening gap, or sorry, this first presentation gap to give way, to go higher. And you're paying a premium and a premium, so this is the only thing I could see that give you any sort of a run in a premium range. And again, you're paying a premium for hopefully a run above here. If not, then it stops right here, reverses, comes back down, and then you're back inside the muck again, 4 minutes before a news event. So yeah, we can see price still acting the way we want it to act, but we don't want to be acting upon it, as it were. Don't diddle in the middle. I like that. Oh, look at that, Craig. Did you see that? We've traded above it, come back into it. Now I want to see this, give me some structure break here. We've got a small area that we'd like to see price turn at. We have a turn happening. We see a structure break with that and use this candle's support to go higher. Then I'd be a little more excited about that. Okay, I'm long and you're long already. Oh, it's already got above. Okay, I didn't see that. Let's go long. Let's take one long. Look at that all fiddling around in there. And for now, your stop loss will have to go down here. Now, ideally, stop loss would go right in here, and you want to see this piece stay open. If it does retrace back, it can come all the way back into here, and you want to see that last little piece of that fair value gap stay open, and that shows you more bullishness. So popping into here, just zipping into that fair value gap below you. Be nice if it didn't even visit it at all, just left from here. Because we have got a trade that puts us above a body, puts us above this high, come back inside it. So this is what we were looking at earlier, Craig, back in NASDAQ. You want to see this with some intention. Now get out of here. You want to see this reverse and shoot right up here. And we wanted it to close above 48, right? Was it the 48 or this one here? Oh yeah, the 15-minute candle. We wanted to see it close above that, didn't we? And it's closing above right now. One more minute. Unless it snaps back down and just rips through and takes us out. Okay, let that cook for a bit. 10 o'clock. Run liquidity one more time. Oh, Craig, look what we got, man. Did we call that, buddy, or what? I'm just going to move this to a little place we call profitability. No, we let it cook. We let it cook, Greg. We let it cook, baby. So that's a logical level it could retrace back to inside this range. You can pay yourself at 50%, 62%, all that kind of stuff. If we want to use this fib tool, I'm going to use this as an example. So now we can move our trade to 50%. I'm not saying you do this, Craig. I'm just using this as an example. So hit 70%, so I'll be out at 62 right there. I'm a little late to the party playing this game here. So if this does a quick reversal now, comes back and takes us out. We're just trading internal range liquidity right now. So if this pops right back up through this, I'll start continuing this little. I've only got one lot on there, so you can't take half off. Yes, we got a little rush there. Okay, so if Craig's going to still trade his, so that hits 70 again. So now I'm going to sit right at 62% or just under 62% there. So if it takes me out, then you'll see why that's, and we'll see if this reverses and comes back down here, and you'll see why that fib tool method works great. And then you might see some of the minor things you say, well, I'm aiming for those old highs for sure, or I'm pulling back into this larger range here. If you enter in on a low range, you want to manage it on a higher range. There's another method you can use to manage your trade as well. If I had 3 or 4, you take a position off, a portion off there at 7. Let's go back and just tap in 62% now. So I'll give it a little tick or two below. Right there. So I'm out. So now if that continues to go higher, then you can decide whether or not that's a method you can judge. Entirely up to you. Whether you like it or you don't like it. And if it reverses, then you think, oh, you sing its praises. But don't sing its praises after the fact. Because if it takes off here, then you judge it after the fact. So that's just people are reactive instead of actually looking at the value of how internal range liquidity, getting in at discount, pay yourself, take half off at 50, regardless of how close 50 is. Move to break even, look for 62, pay yourself a portion there, move to 50, hit 70, move to 62, pay yourself a portion there, let the rest run. If it comes back and takes you out, then you made some internal range liquidity. If it trades all the way back into here again, I'll put the trade on again, start it all over again. Got money in the pocket, and you start the trade over again. And if you're wrong, you'll find out. You put your stop loss down here to start this trade off in the first place anyway. So if it comes back into that order block one more time, we'll start the trade all over again. And if it comes back and takes us out, that's why I called it buffering. It buffers any losses that you could have taken if you're expecting it to go higher. So there's your trade. You get to do your trade over again with less risk, even if it's down here, because you already made some money on the way up. If that makes sense. Another thing you can do, another way you can do that, a more, I shouldn't say advanced, but more, another way you can look at it is if you get up into that 70, 75 and it comes back to 50, you can load it on again and put your trade just below the low of this candle, and then see if it leaves again off the 50. Sometimes it comes back, tags 50, and then starts going higher as the next price leg continues. No stop in for me. Crude is cheap. That's why nice trade, guys. So now I just hope that if you're in this, Craig, I hope that it gets you up into 88 percentile somewhere up in here. which would be the objective I'd be looking for, or at least up into, boy, this is slow. My computer's really slow here. 68.17, so a significantly higher 68.17. So take out that high. So bullish, see how we stayed above here? We're bullish, then we stayed above here. Body broke through that, gives us an indication we're going higher. We look at all the support, we came back, found support at it. All the way back inside it, right here. We dug all the way back, even at the 10 o'clock open. Bang, bang, hit that first presentation fair value gap. Started climbing higher, sloppy, still not going to touch it. Even though we were still calling it from back here, it's still sloppy. So is this moving, or is that stuck? Yeah, it looks like it's stuck. The time is not moving here. Oh, there it goes. The time is stuck. It's not moving. Is it stuck in your guys' one as well? Like, look, this time is really, oh, there it goes. Maybe it was just my computer. So now you're back to this order block here, 50%. Let's see if we can't climb out of here. I'm going to put another one right here. I'm going to use that example I was giving you earlier, 50%. And then the stop loss would go just, stop loss would go just down below here. So now if it gets up to 62%, then I'll quickly move it up to 50. Start the whole trade over again now. Oh yes, it does need it needs our little friend, Senior Carrot. Is this just my computer that's lagging like this? You guys don't have the same issue, I hope. Jeepers. There we go. Probably gonna end up with 10 carats now. So now it's at 60. I'll move to 50%, or just at my break even there. Yeah, there's more carats coming now. My thing's got some, I got some lag in the swag. So now we're at 62, you take a portion off there, it comes back and tags you out. See, now we'll see if it, so you're supposed to, from now, you start getting some legs and get out of here. I don't like all this waffling going on here now. And I only have one, so if you had a couple, as soon as it hit that 60%, take a portion off, move it to break even. You want to see this last little piece stay open here. If it doesn't, it comes all the way back through you here. You can see why this method works great. As soon as you get to 70%, it comes back, takes you out at 62, and then slowly works through and takes you out, or takes out the low again, and we start running back into this low and that fair value gap to fill. Then you go, oh, I could, even though it was on the wrong side of this and it was still going to come back down, I still managed to catch a portion off of here inside that range, internal range liquidity run, and then quickly scale out and then in and out off the 50. This is more risky. This isn't actually a guarantee at all. This sometimes you just hit 70 and it just comes right back through you. So right here off this trade again, you could start that same trade off again, even though you got some money in the bank, and see if that pans out. So if we lose this one on the downside, so that's the return to here. Just as an example, I'll do this one off of here. Don't take this trade with me, just follow along with what I'm trying to accomplish here. So if we lose this on the downside now, so the stop loss will sit just down in here. So if we lose this on the downside, we know we're on the wrong side of this because we've taken these highs, we've reversed around optimum trade entry reversal, and that would be the confirmation that we've traded through here on a close, down, taking out that one with a body, then we can get back in sync for another run back down in here. The fact that we're poking down in here twice now tells me we're probably going to come lower. So I'm just going to let this go, and then I'll show you how we can get back. Once you're back in sync with the market, you can recoup this, let's say $110. See, now we know we're on the wrong side of it now. So you fail safe would close me out here. Close out because I'm on the wrong side of that. Now wait for this structure break to break this on the downside. Another way you can do it is trading back into this fair value gap here, roll over and come back down. Then if you get beat up and it trades to the other side of this, you wait for this structure break and that structure break. Don't get beat up in here multiple times. This is one of those ones you go, okay, I wanted to go long and it went short on me. Now if it goes long on me again, I'll wait for it to break that and then get back in long in sync with it to run for the carrot. If a previous candle closes and a new one starts, the countdown time will not show until the next price prints. It's weird. It makes me think it has locked up. Have a 50% fib retrace. Oil is still long. You're still long in oil? Okay. You need this, definitely need this candle to hold then. It feels heavy now, so we'll see where we are inside this range. Heavy crude, man. Heavy crude. Where are we at in this? Look at that sloppiness. Do you want to participate in that? Are you happy to participate in that? I suppose you would be if you're long and you're still making it, still marching higher. So if you're marching higher on this 15-second chart, you want to see above those candles low. You don't want to see it close below that. Matter of fact, you don't want to see it close below here. Then you got a liquidity run hunt down here. Do I still want 60? Yeah, still want 68 plus, you said, hey? Just remember, we've already traded below here, so it's heavy right now. And all we've done is just come back in to confirm that we're going lower off this here. We've already dropped below there. You've come back up inside it one more time to give you an opportunity to get your longs off to go short. That's the little setup we just saw here. Now we've got a body trading below this. Now you can get back in sync with this as a sell. We'll see if that pops in right there. When it finally decides to, for some reason, oil is just dicking around here. And it's right off this candle here, and then the stop loss, if it ever gives me one, will be right above that. And the first partial will be down here. Now, if you're looking at internal range liquidity, I'm paying a premium. I think I'm way deep into 50% of that. Like I'm paying a discount for a deeper discount. Where's 50? 50's right here. I paid just, yeah, just under 50. There's your 50 right there. Right there. So I want to see that start rolling over and getting back down into here. If it runs all the way back up inside here, takes this candle out. I shouldn't take this candle out here now. You want to see that provide support and then come lower. And if it takes you out again, then move to the sidelines, wait for one of these ends to get taken. Otherwise, you're just looking for compression. But this is like high resistance liquidity trading running. And I'm only using this as an excuse. This is just, or as a demo. So don't take any of the trades I'm giving you. I'm just showing you one way to get back in sync with where price is going. If we're starting to stay in price action, there's the things I want to see and there's the things I don't want to see. So I don't want to see that candle get taken to the upside anymore. It's worked. You want to see it start digging down into this range a little deeper. So because I don't want to see that, I'm willing to say I don't want my stop loss is going to go here now. Now it's digging into where I want it to go. And because we're in a discount and we've paid a discount price, this order block becomes my level of that little imbalance has been hit a couple of times. So that's where I want to see it stay. And we'll see if we can get back into here. I'll move it to break even because again, you're in a discount portion right there. So I want to go to inside. Man, this thing's just not moving. Come on. There, it's going to come back and tap me out now because that's the bottom of that order block. And we're already deep into this range, so this could just reverse here. So that's why I went as close as I did. Right off that fair value gap again. Still coming lower. So you see how this was, it gave you the indication it wasn't going longer, Craig? What we're expecting off of each candle. So now you're inside this range here and you're deep inside that range. So you pay a premium for a discount. That's the small range you're in. So do you want to trade inside, 20 cents? Or do you want to wait for a break in structure on the downside, a fair value gap reversal, and then a run back up into that range? because if you got in on the original entry that we did here and you didn't pay yourself on the way up for that 70% return, that's why that fib tool works great. And again, this is all hindsight now, but whilst I was giving it to you, that's why it's important to pay yourself, pay the trader. And that fib tool for me works as it's a wonderful little tool for trading internal range liquidity. So now we've taken this low out here. You want to see a displacement above here. Can someone confirm we are in a high resistance liquidity trading conditions? Yes, indeed. You can see all the shredded beef above and below the, or shredded carrot above and below. This is a carrot salad. This is definitely a high resistance. But I want to try and show you. So we're looking for a displacement above here now, Craig. So we could get a nice, we get a displacement here. We could be back in the running for another 68. You're looking for your 68, right? Now you want to see this get up here, close above that. See how we did 70% of that range? See what we get here with this one. Come on. This thing's so jumpy right now. It's not smooth at all. Okay, so we had 70% of that range. Now this range here, look at that. 70%, 75, uptrend trade entry reversal. We want to see it break that high there. That's internal range liquidity right there. Boom, boom. Done and done. So now you look for a return to here, and if we get that, you can get back in sync with a run higher. And if it doesn't give us this one here, we wait for this one here to get taken to the upside and use that one. But if Craig, you're still in it still, you got a little bit of a squeeze going on here. If your stop loss is sitting down here, you're still safe. So now you look for, again, internal range liquidity from here to here. And you'll see why this goes. There's 62% inside that range. Reacting off that. You don't want to see it get through the body of that. That's back to imbalance. That's nice. You want to see it kick off of here and start going higher now. Okay, like coffee in a bathroom break, missed all the action. Crude oil is still long. Sometimes sitting on the toilet is probably the best place to be in a trade. I don't want to see it close below right there where it's sitting right now. I don't want to see it get below that. I want to see that last little piece of this fair value gap stay open, this BISI. And I want to see it really start to march on up. There's movement on NQ. Hello. My buddy Abs is just going, I can't believe what I'm seeing. I can believe it, he says. I've been seeing it for years. It's been staring me in the face. We're all true believers now, Abs. Don't you worry, buddy. It's so freaking crazy when you see it, though, hey? There's movement. How many people jumped in on that and chased that price? If you lose that candle, this one's gone. You don't get a chance to get at it. This one's gone. You don't get a chance on it. This one's gone. Don't get a chance on it. This one's gone. Don't get a chance on it. Wait for this to get taken and then see if there's an opportunity to get here. And where are you inside the range, right? If you're large, if you're deep, deep, deep discount already and you only want to get down to a discount range right here, you don't even get a chance to get in on that one. So you've already run down into our little box, magic box I'd be putting down here. Curious to see if it gets down here. How you doing, Craig? Are you still alive over there? 62% of that small range. Now we're through this one. Heavier. Get through here now. Got that little high taken. Reversal. Take out that order block on the downside. We've already traded through this here. Give you an opportunity to get short right here. Looking for these lows, and then they'll run back into this fair value gap below you here now. If ever, yeah, I agree, Abs. He says I trade oil, so I don't sweat. Do, do, do. 8:30, I gotta go have a shower, get ready to go out. I like seeing this order block here. We've come through it. We'll find some support of this. I'd like to see NASDAQ come a little lower now. We can come all the way back up inside here, but I'd like to see a portion of this fair value gap stay open. And I wouldn't want to see us get above 563. Look for this hour to take out the lows or the highs. We're through this already, so all the way back into here. You want to see a portion of this stay open. I guess it could trace all the way back up into this candle's low. That would be the ideal short. And if it goes through it and comes back to it, you're on the wrong side. It's going to go higher. And we are now sitting in the, we're moving now into the crazy Ivan moment of the hour. And you want to see it come shooting right back down again now. Let's see if we can hit that 514 level. Consequent encroachment of that. Bissy is right here. We'll see if we, a full fill of this is right above us, right there. That's a full fill, and that's the high right there. Not a structure shift yet, no. We just have a small reversal. Trade it back up inside it right here. Now, that would be like the ideal short. And if it starts trading through it, mean threshold, comes back, taps it, then you get out, get long, get back in sync with that, going higher. And usually you want to see it just tap right on that and leave like right on that, not wick through it. We can come up into that open, but we're even through the open. So I don't like either. I just want to see it tap this with precision and leave. That would be the nice ideal place for it to happen. And stop loss would be sitting right there. And if a body trades above that, then you're on the wrong side of it right now. And that, again, I don't like that wick through, but we'll see. We'll see what happens here now. Usually if it just comes up and taps it, you see it snap off of it and start heading in that right, the direction you want. The fact that we keep repeating that. Okay, so let's say you said, oh, we were short there. We'll wait and see where that closes. So imagine your stop loss is sitting right here. This is where we're going to practice the fail-safe. Just watch, study the price action here for a second. We haven't got a body above it yet, so we'll wait and see when we get a body above this, whether that runs straight for your stop loss, or we see an opportunity for the algorithm to tip its hat. Well, this may be an early warning sign that it might, but let's just stick with the general setup I gave you for a fail-safe. So right now you're getting squeezed. Your stop loss, you're starting to get nervous. Like, why is this not reacting off here? Why is it not driving down quicker? These are the questions you have to ask yourself. You want to see price when you're seeing this high resistance stuff. It's lingering around in that uh, area of liquidity. You want to see it just get out of, in and out real fast. You don't want to see this lingering. That becomes high resistance by definition. So we've been given the ideal entry for a short way up here. And if it fails, what we're trying to set up here now is how quickly does the failsafe save us? Or do we get our stop loss taken? And how it's acting in here now is something you have to watch enough times to go, no, I don't like the way it looks right now. But we'll just stick with the basic rule right now of a failsafe. Best place to enter short. So this is how it's looking right now. So one will be our enter. One will be our stop loss. So the entrance has now become the failsafe. If we close above here and return to it, we're out. Now if it closes above here, I'll show you what you do on that candle. My rule is I have a certain rule on how it acts on the very next candle. So if it does trade above this, and what if it just kept running? You look at that open, the moment it taps below that open, I don't give it another chance to come back to the open. If it does come back to the open again, I close it out right there. Take the loss from here to here as opposed to that. And because of all this waffling around in here and my impatience, my stop loss would be sitting right in. I'd pull my stop loss in here because I didn't want to take a, because it's waffling around so much. A, you don't want to see, now we've traded below this candle. You don't want to see that candle get taken on the upside. You want to see this continue going lower. And I wouldn't want to be in this trade anymore with it. High resistance crap here. I want to see it act the way I want it to act. In and out. Do your thing. Let's go. But we're going to stick to our fail-safe idea here right now. That's what I want to show you guys. So right there, it's coming back, tapped it, should kick off of that and come all the way back down again. But the fact that it keeps working back and forth here, not my cup of tea. So I would have been out of that at least break even. So still no bodies trading above here yet. There. See how we closed right on it? Not a good sign. So that could run straight for your stop loss right now. Mean threshold was our last line in the sand in terms of our defense. We're hoping this candle here provides some level of defense. It is nothing other than just an order block because we did not break any structure to the downside. So it's your basic order block with a mean threshold support. See how the bodies are sitting right on it? We haven't traded above it yet. So here's where you have to start looking at your rules. Where's my rules say? What kind of rules do you want to develop around your fail-safe? And on my video, I talked about that, about how personal your fail-safe is for you, the trader, and what rules you want to develop around it, and how to trade it and get yourself out before you hit your stop loss. So you see how we closed above it now? You're on the wrong side of that. You're out. So right now, I'd be closing that trade off just because it's now closing higher. It did not come back and give it a tap, so I'm out of that trade with that kind of loss from here to here, as opposed to it running for the liquidity above the market there now. And if you're more patient, you just go, I'll let that candle run. If it does give me an opportunity to get back into here and take my trade off, then I'll take it. Otherwise, I'm willing to take my stop loss. Almost tapped it. So you'd be pretty much break even right there. Now you'd be break even. I would have been a small cost of the trade plus a handle or two if I use that rule. Now, if it reverses and goes all the way back through here again, I wouldn't touch this till it broke the low, till it used this as support to go lower. Now, some people might say, well, as long as you use that mean threshold, that's your line in the sand, which it hit right there. That will be your line in the sand. I'll be, nope, my rule is that right there. If it breaks that, I'm on the wrong side of it. We're probably going higher. And it wouldn't be until you broke below that that we could say, yeah, we're going lower. And this is high resistance, right? You want to see something moving in and out of here fast. That's my first indication that the algorithm wants to go higher. Yeah, it's been super sloppy. So we came down to the carrot. We hit our carrot right on the money. We've got a reaction off the carrot. And now you want to see, where do we want this to go now? We're above here, so the carrot comes up again into this level. I don't know why this is lagging so much in this might be my computer. You don't want to see it get below 67.50. It's all just compressing here right now. It's going to bust out of here soon, one way or another. It's romancing up and down over the first gap of the week. It is Monday's first presentation, yeah. Look how it's bouncing off these liquidity points though. This volume imbalance on Monday. Tuesday's volume imbalance. First presentation. Every time I go to lean on my hands, I put my face on my hands and just lean over my desk. I keep banging this microphone, so I apologize if it's making a lot of noise in your ears there. Yeah, that's just the kind of shit you do not want to be in. You do not want to see it close below 6750. Welcome to your high resistance liquidity run day there, Craig. And even in oil, it was a nice little run down, but it's got all flat on you now from we're coming up for the 1050 macro. So maybe we'll start getting some spooling here. Clearly the 950 macro did not do heck of a lot for us. What's this guy doing? Bitcoin. What's Bitcoin up to? We wanted Bitcoin to come back into this old high here. It's come back into that old high and continued going higher. That's good. What do we got here for? Hmm. Yeah, looking for that to keep going higher now. I would not like to see that break 71,704 on a close. Just keep going higher. Gold's finally busted out. Got out of this fair value gap here, taking these lows. Look for that order block to get taken. So we take this here, we retrace back into it here, go higher. We did not get an opportunity to get back into an old high. But this is one of those ones where you wait for a reversal. There's nothing, nothing, nothing. There's one here. You trade below it, trade back into it, takes out the lows. You get a reversal here, trades above it, comes back in it, takes out the highs. So that's the only thing you can see in terms of reversal here and a reversal here. A small one here. A small one there, did not take the highs. Yeah, that's consolidation there. So this would have been a tough one to catch. You would have to trusted that that was gonna, as soon as that displacement candle came, you'd be like, oh, if we can get back into a consolidation here for a CAM Model 1 for a continuation. You didn't even get that. On the hourly, you got a displacement candle on the hourly and a return back into the top of it to go higher. So higher time frame seemed to work quite nicely. Lower time frame, the regular trading hour gap over the first hour, the first hours Sorry, the very first presentation, fair value gap, right here. Presented here, trade back into it, top of the order block, run higher. That would have been gold on a 1 minute. What's AMD up to? Still climbing higher. That's good. UNG is sitting down in the mud. Little piggies on the run. They're way up there now inside that gap. That's good. Coffee we said would come down to, you didn't want to see it get any lower than 249.10 to 248.7, which is where it's hit. You want to see that keep climbing higher now inside here. It's got to close above 251. Otherwise, it's going to roll over and take that. So you got between this candle here and that candle there. Those two candles in coffee. Sugar. Nothing in sugar. Cattle still on the run. Cocoa's taking out the lows. Back inside this range. Nothing there. Heading up for the carrot. Did not take that. We're still inside the small range here. There's a small little fair value gap here. That imbalance has come back in. You've traded back inside that. You want to see this really start to get out of here now. Still think it's going higher. The carrot. We do not want to see this candle get taken, otherwise opposite direction. Slowly climbing higher, so your stop losses, if you didn't take your stop loss above our fail safe, and you saw this and you went, oh, you second guessed yourself, you broke your rules, you said, oh no, I'm gonna see if this, I think this is going back down again, then it reverses again, find support on top of our order block, our BISI here, an inversion, we find support on top of that, and it starts to move higher. You start to say, oh, I should have got out on that level. Now you start to really second guess yourself. It's already hit the rejection block. So now we want to see if this continues to push through and take out your stop. Had it still been there and you didn't get out at the failsafe. All this was just bonus. You got to get out of your trade and make a small little bit of money to pay for your trade for waiting before it went higher and took the stop. As usual, the market's doing a whole lot of waffling around. This is a non-farm payroll week. I think Friday's non-farm payroll, isn't it? NFP on Friday. I think that's going to be it for me, guys. I'm just going to wait and see if this makes my point about your failsafe and how the failsafe can work for you. You have to trust it. And if it trades back against you and you could have made money, you just have to go, I don't care. It's not acting in accordance with what you want to see, so it's high resistance. Learn how to recognize these high resistance moments and get out of them. And here's an opportunity to get out of it and save yourself the aggravation of going sideways before it slowly starts to grind against you. This is super high resistance crap. You don't want to be in any of this stuff today. And oil, even oil's in high resistance stuff. I have to leave you guys going back to the salt mines to get my bread until I'm profitable and able to live from trading. Have a great day. No worries, Edgar. Thanks for tuning in, man. Appreciate it. Yeah, I think I'm going to be out of here too. Sorry for any of you new folks that have popped in. I couldn't give you anything super clean today. That's the way the markets are. I'm just learning how to recognize when to stay in a trade and when to not be in a trade. And hopefully you learned a little something about this fail safe. There's your stop loss taken now. There's the indication right there. For me, that's the indication right there that we're probably going long. And the fact, remember we were saying in here, I don't like that extra probing. I want to see it hit it and react off of that. This may be the early warning signs. You guys can study this again in the future and see if you want to modify uh, the rules I have around my failsafe. This early warning signs that, hey, look, I think it wants to go higher. Give you this feeling, pop. I am going to go higher, but I'm doing it very, very lethargically. And I'll slowly come up and grind against your stop loss till I finally take it right there. So that's the failsafe. Worked quite well. I would have been at a couple of bucks loss there. And again, how you the one rule you may have is like as soon as it closes above you go, okay, on this candle, if I close back to my opening, I get out of my trade. So your take profit or your take profit now can be right here. You move it right up to break even, and your stop loss, you'd leave your stop loss there. So as soon as it comes down and hits your take profit right at break even, you'd be out of your trade. So there's the rules. Early warning signs, hit it, come back inside that fair value gap busy, and Monday's opening first presentation, and then finally grind it against you. So now you want to see if it takes this one out on the low and then gets back in sync with a continuation on the downside. So hopefully you got to learn something about the failsafe this morning and its ability to save your bacon if you're on the wrong side of the price action, and how to stay in price action when you're on the wrong side of it, how to get back in sync again. So I hope you enjoyed that. If you did, hit the like button. If you didn't, don't worry about it. And if you're new to our channel, by all means, stick around. We have lots more awesome days ahead of us and tons of trade opportunities. Don't ever worry about days like this. These are days you get to practice, a good opportunity to get to practice and not have any of your money at risk. So until then, Wednesday, we're getting closer to non-farm payroll. So if you haven't got your trade off by lunchtime today, um, not a good advice to get in it closer to the week as it starts to get more messy and markets start to move around. Friday after non-farm payroll, 15-20 minutes after non-farm payroll, we can start looking for an opportunity to make some profits. But if you've made a little bit of profits this week, hold on to them and don't participate in this high resistance mess. Just study price like we just did here. It's a nice that was a really nice lesson to learn right there. For as far as I'm concerned, a really nice opportunity to see price action and giving us a slow example of how the failsafe works nicely. There, they get faster and faster examples. This was a really nice slow example of how it can give you the indication it's going in a different direction. But until then, thanks very much for tuning in. I appreciate you guys' time, and thanks for all you people who are subscribing, and thanks for the thumbs up. appreciate it. And I will see you guys tomorrow, bright and early. Probably again, I'll probably need another hour before the markets open because I tend to get up a little earlier here than I thought I would. So